The UK is currently in recession, but the actual story lies in this graph, which shows the stagnant wage growth of the past 14 years. This flatlining of economic growth is leading to higher taxes and few public services. It's a combination of low growth, low investment, and increasing pessimism. Now, though government debt is worse than it appears, some fears over debt may be somewhat exaggerated. There are few other areas which are equally important and often aren't addressed. The UK Treasury is keen to point out that the country's real GDP growth is not too bad compared to other countries, but this is somewhat misleading because most of the growth in GDP has come from a rise in the population. In the past 2 decades, due to migration, the UK population has grown from 59 million to 67 million, and if we look at real GDP per capita, UK living standards have fallen in recent years. If the UK had maintained their past rate of economic growth, it would be an extra £8,000 a year per person. This explains why real wage growth has been so minimal in recent years, and it's been quite a shock to the system because the high living standards we got used to in the post-war period is now becoming somewhat unsustainable. The good news about the economic situation in the UK is that the unemployment rate remained low. In the 1980s, unemployment averaged 10%, and in the 1990s, 8%. Today, the figure is less than 4%. It is a very strange recession to have such a low unemployment rate, but there's a catch to it. Firstly, there's been a significant growth in temporary zero-hour type contract work, leading to more labour market uncertainty and underemployment. Secondly, and perhaps more concerningly, there's been quite high levels of economic inactivity. Not classified as unemployed, but not working either. Nevertheless, despite a technical recession, firms still face labour shortages in certain areas, and this has been a big factor behind the pressure to fill labour vacancies, especially in certain sectors such as the healthcare workers, fruit pickers, and vocational workers like bricklayers and plumbers. The average wage growth is stagnant, but the experiences of different worker groups diverge considerably. This graph shows how higher food and energy prices hit lower income families more, who face a relatively higher inflation rate. It's the poorest who are likely to see the biggest squeeze in living standards in coming months, and after housing costs are taken into account, there's been a major rise in child poverty levels. While progress has been made in recent years to address income inequality, these gains are now being eroded by the current economic pressures. Though the UK has struggled to grow its income, the past decade has seen more impressive growth in wealth. The ratio of wealth to income has increased. Now, this was partly driven by the period of very low interest rates and quantitative easing, which contributed to house price to income ratio soaring, and this created winners and losers. Homeowners who bought more than 15 years ago are sitting on quite significant equity gains, but the new generation of households face an unpleasant choice between high rents and very difficult to get a mortgage. As a result, the ratio of young people becoming a homeowner has plummeted in the UK, and there's a big divide between those whose parents own a house and those who don't. The housing crisis has effectively worsened living standards more than real wage figures suggest, and the UK is one of the worst housing markets for low-income groups who pay a high share of their income on rent. The problem is, there seems to be little solution to the housing crisis. Higher interest rates and inflation combined with weak demand has seen building rates fall in 2023. One study suggests a shortfall of 4 million homes in the UK, but building homes where they are needed is going to be a great challenge, especially with population rising to 76 million in the next 20 years. Historically, the UK was one of the most open economies, with trade a major source of economic growth, but since Brexit, firms have faced higher tariffs, more regulations, and custom barriers. Even the new regulations passed in the beginning of the year are particularly damaging to the food industry. Analysis by top firms estimate the net cost of Brexit to be around 4 to 5% of GDP compared to if the UK had stayed in the single market. Now, this cost is spread out over many years, reducing economic growth rates by an average of around 0.3% over the next 15 years. The uncertainty due to Brexit led to a big drop in private sector business investment since 2016, and this is a problem because the UK has consistently had low levels of investment. While private sector investment is weak, it's not helped by the fact that public investment has also been quite weak, with the government cutting back on public investment to meet debt rules. Now, another issue is that When examining an economy, it's not just about GDP per capita and individual wages. Living standards are determined by the state of public resources. For example, the NHS has faced a sharp rise in waiting lists. Total waiting lists in England have risen from 2.5 million in 2010 to a near all-time high of 7.6 million. And it's not just about money. Productivity growth in the public sector has been near zero in the past decade, which is a real problem. Even other departments have not been protected, and they've seen real cuts in spending. Education, the legal system, and the local councils have all really struggled with the spending cuts, and services have suffered as a result. So, in this area, the outlook is quite concerning. The head of the OBR has recently criticized the government, stating that their spending forecasts are based on arbitrary figures, with no detail on how the cuts will be achieved. The country's public sector debt reached a post-war low of 33% in 2000. However, it has since seen a substantial increase, triggered by the financial crisis of 2008, and has continued to grow due to COVID, low economic growth, and an aging population with growing healthcare needs. A positive development in the UK economy is the recent decline in inflation. Over the past 6 months, the rate at which prices have been increasing has fallen significantly. This is partly thanks to gas prices going down, and experts predict it will keep going down and meet the Bank of England's goal later this year. But things are still more expensive than before the inflation crisis hit. The UK's inflation experience was somewhat similar to the rest of the world, and Europe in particular. Yet the overall increase in prices was slightly higher in the UK than the rest of Europe. Now, another concern is that the banks are perhaps now overcompensating for their past inflation failures by maintaining relatively high interest rates given the economy is going into recession and inflation is falling. But it's having a major downturn, especially for those with mortgages and borrowing. The United Kingdom's economic performance over the long term can be observed through the continuous depreciation of its currency, with the pound depreciating steadily against both the euro and the US dollar. And one of the UK's real concerns is its long-term fall in productivity growth, which fell off a cliff after the great financial crisis. Fixing this isn't easy. It requires many things to fall into place, like better technology, smarter management, and everyone using new technology effectively. It's a complex puzzle, and until we solve it, things might not get much better economically. While the UK faces challenges, it's not all bad news. It's still a wealthy country, although the wealth is more concentrated in some cities and among fewer people. This gap is a big problem though. Another issue is the uneven spread of wealth across the country, with London and the southeast leaving other areas behind. The UK isn't as poor as some countries, but its economy hasn't done great lately. Think of it like getting bad marks on a report card. However, there's some hope. Experts predict the UK might grow more in the next few years, which could brighten things up and make the government's job a bit easier. It wouldn't be perfect, but at least it's a step in the right direction. Basically, the good news is the UK has room to improve, but the bad news is it might not be able to.